Welcome to Destination Business Freedom, hosted by Pat Mancuso. Join us as we explore success strategies and hacks from leading entrepreneurs, helping you bridge the gap between financial success and personal freedom. Your journey starts here.
Hello, everybody. My name is Pat Mancuso, and I'm the host of Destination Business Freedom Podcast, and we are excited that you're here today. We interview thought leaders and entrepreneurs and business owners who have either exited their business or are on that journey, or specifically they're helping other business owners to get to that point. Our guest today is one of those individuals that covers a few of those bases. He's an entrepreneur, he's the CEO of a company, and also he's helping other businesses to put more money in their pocket and get to that exit. So we're super excited to talk to our guest today. Before we jump into that, though, I want to offer an opportunity from our sponsor. The Mancuso Consulting Group has an amazing method called the Mancuso Method. And in that process, as a business owner, small to medium-sized business, we have a simple assessment of 10 questions. And those 10 questions are going to create a report instantaneously. And that report is going to give you some goalposts, some guidelines, and it's really a roadmap. One of the things that we're super passionate about at our company is helping people get to that exit. Frankly, about 95% of people never get to that exit. They never get the money out that they want. And it's a shame because that's not why they ever got into the business. And so if you're open to that free assessment, taking about 3 to 4 minutes and answer 10 simple questions, you can go to www.themancuso-method.com, take that assessment, and here's the beauty. Once you get that report, you're invited to a 30-minute phone call, and the guarantee is this. You spend 30 minutes with us, and if you don't see $10,000 worth of value in that 30-minute call, we're going to personally write you a check for $500 on the spot. That's how confident we are that we can impact your business on the top or bottom line. So I am excited to introduce a gentleman to you that I met probably about 5 years ago. It was about 2020, actually. It was pre-COVID. And we were expanding services in our company, and I was introduced to the tax credit world. And initially, I paused a little bit on it. I've been a business owner and entrepreneur my entire life, and I'm like, tax credits, that's kind of interesting. So I go do a little bit of research, and as I'm doing my research, of course, the research is on the internet. And what I was finding was not very positive, was not very favorable. In fact, I read some things that, if you go take advantage of a tax credit, you're going to go to jail. Now, I know that that's not accurate personally because we've taken advantage of tax credits in our business. But unfortunately, there's a lot of misinformation out there. And so today our guest is Brian Pearson. And Brian is an individual who I have had the experience of working with very closely over the past 5 years. A number of my clients have worked with Brian and his company. And today we're going to talk about what I really believe is one of the biggest missed opportunities for small to medium-sized business owners, and that is the tax credit world. And so I want to introduce Brian Pearson. And Brian, you've got an amazing resume and bio. However, I would not do it justice if I read it off a piece of paper. So tell me about Brian. Tell me how you got into this world, and just anything you want to share that you feel is relevant to our conversation.
Well, thanks, Pat. Good to see you again, my friend, and thanks for having me today. I certainly look at the past 36 years of life experiences, and it sure has gone fast. And sometimes, there are people that are I surround myself with, and they certainly have nice things to say about, my resume, my credentials, achievements, whatever. I mean, thank you for that. At the same time, it's just the course that life has taken me and how the Lord has led me. But I have had an opportunity to do a lot of things and over the past 36 years, but primarily I was working early on in my career with the United States military, doing insurance, financial planning. This is going back to, 1989, 1990 during the Iraq War. And then again throughout 9/11 and Operation Iraqi Freedom and all that stuff that was going on. And I've had a lot of interactions with the military, the chiefs of staff, the chairman of the Joint Chiefs, vice chairman of the Joint Chiefs, et cetera, et cetera. And that's been wonderful. And I did serve as a senior officer for a publicly traded financial services firm out of New York City for 15 years and kind of got bored with that. Obviously got a lot of experience with that and kind of went back into business for myself. And in doing all of these things, Pat, somehow I also was able to find time to coach professional baseball, 3 years with the Houston Astros, 8 years with the Texas Rangers. And I've also done property development for the last 36 years. I've built, multifamily and townhomes, retail shopping centers, flipping 3,000-acre ranches, you name it, flipping homes, again, offices, retail shopping centers, everything. And I continue to do that to this day, but really, my focus and what's taken so much of my time has been working in the tax consulting space, helping business owners take advantage of tax credits, refunds and tax deductions, tax incentives. And since about 2017, almost a decade ago now, since that time, we've helped business owners because that's who, as you know, that's who our audience is. That's who we're able to help. That's our focus. And we've helped business owners receive nearly $3 billion in refunds and credits and incentives over the past 8 or 9 years. So it's been a great joy to work with nearly 10,000 businesses across the United States in every industry that you can imagine. And, one of the things that really to this day has been motivating is to be able to go and talk to a business owner and help them get money, help them receive money. And you know exactly what I'm talking about. Instead of trying to sell something and have them write a check for a product or a service, nobody's going and talking to the business owner, not even their own tax professional is going and talking to the business owner about, hey, let me see if I could get you 50,000, 100,000, 300,000, $1 million back that you can put back into your pocket. And that's a game changer. And not to get ahead of ourselves this afternoon, but again, it is such a game changer to be talking to a business owner and show them how they can potentially get hundreds of thousands of dollars to buy new equipment, hire new employees, expand their business, or even possibly load up or accelerate their own retirement savings so they can actually retire from the business one day.
Yeah. Well, Brian, what's interesting, and there's a lot to unpack there, and we're going to unpack some of it, but I hear all the time, and I heard this so much, as we've gone through 4 years of ERC, the Employee Retention Tax Credit, and probably one of the most controversial, misunderstood, I might even add mismanaged tax credits in at least my experience, because I started in the research and development tax credit arena, and we're going to talk about that a lot today. But it's amazing to me. You touched on a few things. First, you said most of their accountants and their CPAs, no disrespect to any of those folks, but I would ask a client, and we did business with over 800 clients in about 18 months. And I would ask them, I say, when was the last time your accountant or CPA came to you, not you went to them, but came to you with a tax credit or a tax incentive opportunity? And you already know what the answer was. It was zero. Yeah, it was zero, which shocked me, number one. And, so I read a book, you may know about this CPA. His name is Tom Wheelwright, and he wrote a book called Tax-Free Wealth. And as I read that book, I absolutely will have every one of my clients read that book, business owners, because he said, and this is probably one of the most misunderstood things, and I want your perspective. He said, the tax credits, tax incentives are really put in place by Congress to incentivize business owners to grow their business Now, the growth comes when they're growing. That's when the incentive is. And of course, the government's going to want some of that money back when they exit, but that's okay, right? And yet we have people who are not bringing these opportunities to people. So why do you think that is?
Well, I can tell you, Pat, first of all, exactly why it is. Again, like you just mentioned, not to bash anybody specifically in the tax industry,
Right.
not bad mouthing any tax professional out there, but it is a culture that's been created where the tax professional, whether they're a bookkeeper, an accountant, an EA, a CPA, a tax attorney, whatever. I mean, so many of these fine people, smart people, hardworking people are knocking themselves out every day, just, the old saying, herding cats. They're
Right.
just trying to manage hundreds, if not sometimes even thousands of clients. And things are happening so fast. The first of the year rolls around and it's time to get the W-2s and W-3s and 1099s and 1096s out and file those franchise tax returns. And now it's time to file the corporate returns. Now we got to file the extensions because we're not ready. Our clients haven't gotten us everything. But guess what? It's April 15th almost now, and we got to file the personals. And for those that aren't ready, we got to file those extensions. And we're just hustling, organizing, loading data into our software, and all of a sudden now it's time to file the corporate returns. The deadline is September 15th, and we got October 15th right around the corner. Now we're going to take a breath, breathe for a minute, maybe take a day off, and it's time to do it all over again, Pat.
You're exhausting me just going through that process.
But you know what? I also, I believe, in fact, I know that there's really a misunderstanding and unrealized expectations from taxpayers, especially from business owners
Right.
that have a relationship with a third party CPA or accountant. And that is when they sign those annual engagement letters, they very seldom read them. And really what those say, if I was to kind of paraphrase, we have not audited any of the information you gave us. We do not take any responsibility for any of the information that's been put into your tax return. And we're certainly not being hired to understand your business and come up with 27 different tax strategies to
Right.
help you mitigate your tax liabilities. What they're generally looking to do is load your information that you gave them from last year, load it into their software, get it all in there, hit submit, and hopefully they get no errors. And if that's the case, we did our job. On to the next one. The idea that your tax professional has the resources, the capacity to sit around with their feet up on the desk thinking about you and your business while they're combing through a tax code that is over 7 million words, that changes every year, that changes with every administration, and you think that they're an expert or a specialist on everything and anything that has to do with tax. And again, furthermore, that they're sitting around coming up with tax strategies specifically for you, that's one of the last things on their mind. And
Right.
that's why, Pat, to your point, it is not uncommon. It is the culture of the industry that as a taxpayer and as a business owner, tax client, you could be working with a small accounting firm. You could be working with a national size accounting firm. And it is very normal that you receive no emails, no phone calls, no mailers, no flyers, no invitations to meetings, webinars, in person, nothing whatsoever, because their goal is to get your taxes done. That's it. Very, very few people do what you and I do, which is actually investing time into understanding what that business does and how they operate and what their financials look like, and looking back at previous tax years, and also, Pat, looking forward, not so much looking backwards, but also looking forward to find those incentives and credits and deductions for that business owner.
Brian, you hit on so many points there, and it ties into what my passion has become. So you might recall this. I had a huge track record in real estate, and that's where I started my entrepreneurial career, was selling houses. And as I became a consultant and I grew my consulting business, and over the past 5 years, what I've discovered is that there are so many businesses, again, going back to this exit, right? Everybody wants to retire at some point. They want to do something when they retire, travel, play golf, maybe consult, whatever. They just don't want to have to worry about money. And the problem is most small to medium-sized business owners have no GPS to the address to exit. And there's a lot of things that relate to that, but as it relates to tax credits, there's a simple tax credit, you're familiar with it, I know you are, called the Augusta rule.
Mm-hmm.
And many small, medium-sized business owners could or couldn't be taking advantage of it. That's their choice. But the fact is that it's about $15,000 a year. And if I owned a business for 20 years, that's $300,000. And if I put a multiple into that, that could be $1 million of extra value into my company. And yet most business owners don't know about it, don't know if they could take advantage of it. And that just pains me. It just absolutely pains me. So the passion is there. And that's why, obviously, I've hitched my wagon to your company, because you're a student of this. I can't tell you how many times that I've called you and, looking for an update, looking for insight on this, and you're just Johnny on the spot with it. So the difference between a brain surgeon and a general practitioner is they both do great things on human beings, but they don't do the same thing. And that's why this area is so important. So I want to throw some things out at you, because, people will hear this podcast and they'll go, I don't want to be audited. Like, that is the thing I hear all the time. And, historically, I didn't want to be audited either, right? That word has just got that connotation to it. And yet what I've learned is there's different levels of audit, right? Number one. Number two, the only reason you should be fearful of an audit if you're not preparing in advance for it with an understanding of what you need to be prepared for. So when people say they're fearful of an audit, how would you respond to that in terms of what you do in your company and how we work with clients?
Well, first of all, Pat, I hate to say this, but I blame a lot of that on our industry.
Right.
Because oftentimes those exact words come from tax professionals, but it's not coming from an accurate or even a well-intentioned space.
Right.
Oftentimes I will hear of a tax professional saying something like that to their tax client because they don't know anything at all about the research and development tax credits, which, by the way, has been around since 1981. What is that, 44 years now? But it certainly has evolved a lot over 44 years. And so a tax professional that does not do the R&D for their clients and maybe heard about it at a continuing education class 25 years ago, and they also are afraid of losing that client. Hey, somebody's talking to my client about taxes. I need to inject myself into that conversation, and I need to kind of scare that other person or company away. And so these things come up like, oh gosh, you shouldn't do that. I don't think you qualify. You're going to get yourself audited. And again, that's not coming from a good, honest place, because the fact of the matter is, to your point, if you qualify for the credit like any other credit or incentive or deduction, you do. And you have documentation to support that as well. And we have enough clients and enough years of service, and even looking at third-party data, there is
Right.
nothing whatsoever that supports that statement that if you file for the R&D that you're going to get audited. That is absolutely not true. In fact, I've heard this over the years, Pat. If you simply amend your returns, you're going to
Right.
get audited. I mean, please.
You're going to get audited if somebody decides randomly to audit you. The bottom line is, the fact is it's a random thing. Now, if you do certain things that, raise flags, or you're dishonest, of course that increases your risk. Or if you commit fraud, let's be honest, that absolutely will. And there should be consequences for fraud. However, the difference between fraud and applying for a tax credit is like night and day. It's like, dog and cat. And people should go to jail if they committed fraud, which there's been fraud in a lot of things. We've got one of the biggest fraud deals here in the state of Minnesota in terms of some of the government programs. And now all of a sudden we're going to, investigate fraud when it's been going on for years. So that's crazy. So let's dig in a little bit if we can, because you talked about R&D being in place since the Reagan administration, and it has changed. And even when I started in that world, it was one way. And then during COVID and during that time, it's changed. And now it's changed again in the big, beautiful bill. So let's just start basics here. What's the research and development tax credit from your perspective?
Well, again, you almost, to your point, Pat, you've got to look at the history in the creation of the research and development tax credit. I mean, I would agree with the intentions, and to answer your question, that would be part of my answer is that if you look at the intentions of when the R&D was created, why it was created to give the U.S. A technological advantage. It was to create velocity of money movement across the country. It was to incentivize, as you mentioned earlier, business owners to expand their operations, to buy new equipment, to hire more employees. And obviously, if hiring is going on and there's a big productive workforce and you're spending money and buying equipment, that's creating jobs, that's creating a lot of money movement and velocity. If you're building new buildings and opening up new locations, I mean, it's just good for commerce. It's good for the country. It's good for the revenue that's being created and brought into the treasury. And so that's really all of those different components is what the R&D is all about. And to this very day, I would say my definition is still the same. It's to incentivize business owners to put money into their business if they are engaging in qualified research activities. It is money that can come back to them that they can in turn use to grow their businesses.
Yeah.
And, as it stands right now, and I know you know this, Pat, but most of your audience probably doesn't, and that is that even now, the U.S. has fallen so far behind, and the tax credits available here in the U.S. is a fraction of what is available in many other developed countries around the world. And it's a very, very small fraction in comparison to what China offers their businesses in terms of the R&D tax credit.
Right. So people hear research and development and they go, I'm not a tech company. I'm not a bio company. I'm not a pharmaceutical company. That's not just the companies that qualify. So how would you respond to somebody hearing this thinking, okay, do I qualify? Like 2 or 3 things to stimulate their thought.
Well, first of all, I resort back to 2003 when the Internal Revenue Service did away with what was called the discovery rule. So I would say, Pat, that prior to 2003, so really from 1981 to 2003, the R&D didn't really change a whole lot. Prior to 2003, you kind of did need to be engaging in R&D and what most people would probably think of when you mention R&D. So you had to be engaging in new to the world type of technology.
Right.
But when things changed and the discovery rule was taken out, that opened up the floodgates for small businesses to now claim the R&D. And so to answer your question, when we look post 2003, businesses no longer have to be engaging in new to the world type of technology. They don't even have to be engaging in new to their industry. You know, if you're an orthopedic surgeon, you don't have to be engaging in new to the industry type of technology. But if you're engaging in qualified research activities, R&D that is specific to your practice or your firm or your business or your company, you can qualify for R&D. And so there's a lot of different qualified research activities that we like to talk about and expound on and investigate all the time. But, you know, many business owners that would consider themselves not engaging in R&D, they are in fact performing qualified research activities every day as defined by the IRS.
Yeah. It is shocking that with the opportunity, first of all, margins are shrinking in businesses, right? We try to raise prices and obviously that impacts the consumer. And, you know, there's a lot of pressures and a lot of different things. Taxes haven't been going up, whether it's state, federal, or local. And the taxes are coming from a number of different perspectives. But what I find interesting, I'll say interesting is the best word I can use, is until you actually start thinking about these activities, these qualified activities, it really takes somebody who can see the side, see the business from a different perspective and then have these conversations with these business owners. And again, going back to, we're not bashing any industry, field, special, accountants or CPAs or anything like that, but that's just not what they do every day. And I know for me, and I know for you and all the folks that work on the team there, is that's what we're doing every day when we're having these conversations. And we might talk with a business owner in an industry and they might go, oh yeah, we did that. And all of a sudden we go through the process of determining, was that a qualified activity? And now you take that to another business in that same industry and they go, yeah, we do that too. And now all of a sudden you have a conversation that's at a whole different level that you wouldn't have had if you wouldn't have had that ability to talk to that business owner. So I'm going to talk in just a second and we're going to talk about the opportunity, because there's a short-term opportunity and there's always been a permanent opportunity in R&D because it was codified a number of years ago. But we being us and our affiliation with your company, we do an analysis that doesn't cost a business owner anything unless unless we determine through the process they have eligibility for that tax credit. Expand on that a little bit.
Sure. Well, it's worth mentioning, Pat, that over the years we built a very solid team, what I refer to as just a 5-star team of talented tax professionals, from cost segregation engineers to tax attorneys to CPAs, EAs, accountants, etc. All of our CPAs performing tax work all hold Masters of Science degrees in accounting and taxation. They've worked at the Big Four accounting firms. The average has been in the industry for over 30 years, et cetera, et cetera. So we've got some great tax attorneys, cost seg people, R&D engineers, et cetera. So yeah, it's part of the process that we will take a look at a business and with an understanding of how their business operates and what the management and the employees are doing every day, and looking at projects that they're working on and solutions that they're coming up with, etc. And then also looking at their financials, our engineers and our CPAs are able to create a nexus between the activities that they're engaging in and the expenses that they incur as a business, and then run run that through our processes, apply the calculations that are part of the R&D tax credit process, and then come back with an estimate. And we might come back, Pat, and say, hey, you don't qualify. You're not engaging in qualified research activities or R&D. We might come back and say, you're growing, keep up the good work, and let's revisit this in a year or two from now. And then many businesses were able to say, hey, we've got great news. We can help your business claim back, pull back, claw back some of this money that you've spent over the last couple years, and we're estimating $329,806. And if you give us the green light, we'll do the tax work, and we'll get that processed. And before you know it, checks are going to show up in the mail.
So in my experience, Brian, in the past 5 years with the clients that we've been able to bring to the company has been, it's been amazing, because it's not in my world, and it's always been my feeling as a business owner, entrepreneur, and we provide, consulting services, is that it's not what you say you're going to do. It's what you do after you did what you said you were going to do. And all of a sudden now there's a curveball, right? And in our world, the curveball is maybe the IRS has a question. Maybe there's a document that wasn't, exactly the way the IRS wanted it. Like, it's crazy, even just going through the process, with ERC, how many documents they kick back because they said they couldn't read the signature on it, when in actuality, you know where I'm going with that. So my point is talk about how you guys stand behind that product, stand behind that service, in terms of if there is an audit or if there's questions or anything about that. Because I know what you all do, but I'd love to have you share that.
Well, sure. Well, Section 6 of our contract states, and I cannot quote it, so forgive me, but I'll paraphrase.
Paraphrase it. Yep.
We will defend our work at our cost, and we will always make the client whole.
Yeah.
So if we are engaged to do the R&D, and for some reason we are unable to perform, or the work that we did perform is audited, if for some reason we were not able to defend it successfully, then we would make the client whole in terms of any losses, any monies that they've paid us. And of course, the defense of that audit is on us, on our dime, on our staff. And so, yeah, I mean, that's you kind of get what you pay for, as they say. And if you engage a team of 5-star tax professionals, I mean, we're going to do the hard part up front, which is vet that company and vet out the claim and make sure they qualify. Why wouldn't we? If we're going to potentially have to defend that one day and defend it successfully one day, we want to make sure that we can. So, it's really that simple. Section 6 of our contract. If you engage us, we will do a great job. And if you are unfortunately ever audited, we will defend that audit at our cost. And if for some reason you are ever out a dime, we will make you whole.
And Brian, I know that, and I was going to try to grab the contract, but I won't do that because you did an amazing job. But here's my point, is that, and I'll use ERC as an example. There were a lot of companies who are no longer around that took their fee and now clients have questions and there's no place to go to answer it, right? And so I think that's so important. Your name is on it, my name is on it, my relationships with the client is important to me. And so I do know you all stand behind what you do, and that relationship has been very important to me, because again, something most people don't know, this isn't just a one-time deal. I mean, clients keep coming back and back and back because that incentive, that opportunity, may be something they can take advantage of every year. So that segues to really the fun stuff with our conversation today, and that is BBB, the Big Beautiful Bill, as it's known, brought back an opportunity that wasn't quite as appealing as it was previously with R&D, relative to 22, 23, and 24. So will you talk about that? I mean, I know I'm not going to talk about it as well as you would. So talk a little bit about that opportunity that's in front of us, in front of business owners.
Well, I feel like it's the hourglass, Pat, where we're kind of going like this, and you're old enough to remember the daytime
Days of Our Lives, yeah, Days of Our Lives. I remember.
And yeah, so when President Trump signed the big beautiful tax bill on Friday, July 4th of this year, it put in what I call the fix for the R&D, because when the 2017 Tax Cuts and Jobs Act expired after 2021, it really put business owners that were claiming the R&D in a bad spot. And quite frankly, the thousands of R&D clients that we have, we quit doing R&D after 2021 because if it was just very difficult to have a conversation with a business owner talking about their 22, 23, 24 taxes and telling them, hey, I've got good news. You can claim the R&D tax credit, and you're also going to have a substantially higher tax bill this year because you claimed it.
Without getting the money that you're claiming it for.
Right. Yep. So that was that was a conversation I and the rest of our team was never willing to have. I mean, as a business owner, I wouldn't do it. I wouldn't tell my friends and family, hey, you need to pay more taxes this year so you can claim the R&D and amortize it over the next 5 years. So everybody, existing clients, potential new clients, everybody's been in a holding pattern since the end of 2021. And golly, time flies, Pat, because if you look back at 2021, well, there was all this talk and all this expectation that Congress would fix it and extend it and all that. And then it never happened. You get into 22, and then I don't know if you remember, but the House actually passed a bill in January of 2023 to fix the R&D. But then, the House and the Senate are going like this. And the Senate basically said, we're not even going to review that or take up a vote on it. So it just kind of died. And then obviously a lot of people, I guess, didn't expect President Trump to get elected. And he gets elected and he starts changing things. And then it takes until July of this year to get the big, beautiful tax bill signed, which did a lot of things. No tax on tips, et cetera, bonus depreciation back up to 100%, all those things. But it did, in fact, fix the R&D, but also,
this is the exciting news.
Yeah, this is what, really is exciting. And it is like the hourglass is running out of, we're running out of time here, because we have until July 6th of 2026, basically a year. It's a year and 2 days, but President Trump signed the bill on Friday, July 4th. We have until July 6th of 2026, where business owners can go back and retroactively claim the R&D for the past 3 years. So 2022, 2023, and 2024. So that's 3 full years that a business owner can go back and claim the R&D tax credit, which, based on what we saw pre-COVID and what we've
Sure.
seen even post-COVID and what we've even seen since July 4th of this year, those are some pretty substantial refunds that the average business owner is receiving because of being able to go back and grab 3 years all at one time. So again,
Right.
we are running out of time because I'm looking at the calendar. I mean, it's September, middle of September right now, and we've got what, 9.5 months left.
Right.
And then business owners can't go back and grab those 3 years anymore. Now, to your point, after July 6th of next year, yes, they can do 25 and you can do 26 and you can do 27. And it is money that they can claim every year if they're engaging in R&D. But right now, to go back and grab 3 years can practically be life-changing or business-changing.
Or business survival, right?
Yeah.
And you've explained it very well. And yet previously, when I got started in R&D, the opportunity was to go back and amend those 3 years. Well, that's not the case in this case. This is a one-time, one-off. We're giving you an opportunity to recapture those 3 years one time before July. So there really is a definitive deadline on that. And so it's exciting. And I think there's amazing opportunity out there for businesses that do qualify, and the industries, the list of businesses that qualify, it's pretty comprehensive. There's some of the easier ones, dentist, optometrist, orthodontist, the ones that, could logically possibly qualify. And then there's a whole bunch of other ones that when I see the list, I go, well, that's kind of interesting. And then when you start to think about what they do, it's pretty exciting. So, and you mentioned earlier, we do a lot of other things. We do cost seg and we do R&D. And, the thing I know about you guys and your team is that if there's an opportunity and it makes sense for business owners, you're going to explore it. You're going to do the due diligence on it. And so that's what I love. And I love the other thing, Brian, about you is you're connected. In connected, I mean that you don't just do this daily. It's a passion for you. And you talk with people outside of your office and you talk with people in DC and you just, the knowledge base that you have every time I've called you and asked for updates and different things has just been amazing. So I'm grateful for that. And I do appreciate that as an agent and helping business owners out there. So as we wrap it up here, this has just been awesome. What haven't I asked you that I should have as it relates to tax credits, specifically R&D? What else would you share here before we sign off?
Well, thanks for that, Pat, because I was hoping you would ask.
I've done this a couple times.
Yeah, you're an old pro. I think it's worth mentioning, and it really goes back to the whole crux of what we're talking about and why all business owners that qualify are not claiming the credit. We know that the industry, the tax professional industry, just doesn't have the resources, the culture, to be able to talk to business owners about it. I mean, the fact is, I could talk about this all afternoon, but most people listening to us on this podcast, their tax professional is probably retirement age. Right. And there's not the influx of new talent, coming out of college, filling that void or vacuum. And so you find that a lot of accounting firms are simply understaffed. And it is a fact that many of the states are even reviewing and changing their requirements as to what it takes to become a tax professional to encourage more people into the profession and to gain certain designations. But that being said, don't think for a minute the Amazons, the Apples, the Boeings, the Teslas, don't think for a second they're not jumping all over the R&D. They do it every year, and they claim millions and millions and mega millions of dollars of R&D tax credits. But you know what? It's not just for the big guys. It's also for the small business owner. In fact, The famous senator from Iowa, Chuck Grassley, he's quoted as saying it's for the small business owner, not just the big companies out there. And you know what, Pat? It's worth mentioning that according to the IRS, over 90% of businesses that qualify for the R&D never claim it.
Yeah. And when you stop and think about it, I know, and we won't get into specifics of averages, but even if you think about a small to medium-sized company and they have $50,000, $100,000 of eligibility, over the next 10 years, that's $1 million.
Mm-hmm.
And it's not just $1 million. It's what can the $1 million do to either grow the value of the business, grow their team, grow the services. And, this passion of mine, and you touched on it because we're in the process right now of due diligence, if you may, on an accounting firm. And the reason that I'm passionate about that is I want to try to tie this conversation together with the business owner and be more than a consultant, be more than an accountant, be more than, in other words, everything's siloed for them, in my opinion. And that's part of the problem because they're making decisions in silos. Many of their decisions, no disrespect again to industry, but many of their tax decisions are year end and what equipment can I buy? And that may or may not be the right decision. I don't know, but I do know without asking additional questions and understanding that business. And as a business owner myself, as an entrepreneur, as building, scaling businesses over my career, I understand a lot about business and industry. I'm not sure that it matters if you just understand business. And so when you talk about this, it's just such a huge opportunity. And I'm passionate about getting to that 90% of people so that they don't leave that money on the table because profitability right now, companies are struggling for it. And this could be a lifeline for many, just like ERC was a lifeline for many as well. So, Brian, as always, amazing. So if somebody were to want to reach out to you, what would be the best place to do that? You might have some people listening and go, hey, I think I need to think about getting into this arena. Obviously we'd like to help clients as well, but if somebody wants to reach out to you, what's the best way to do that?
Well, I would say, first of all, if you feel as a business owner, small or large business or somewhere in between, and you want a free consultation just to have somebody look at your business and talk more about it, understand it, look at the financials and see if there's an opportunity for you to claim a substantial amount of money utilizing the R&D, get a hold of Pat Mancuso.
I love it. I love it.
Pat. Okay.
Well, that's the whole idea. However, if somebody would want to reach out to you, how would they?
No, if Pat is unavailable for some reason, you can go to our website, Recover Your Credits. That's plural, recoveryourcredits.com. And you can contact us via email, telephone, etc. And ask for me personally. I'll be happy to chat with you or get my friend Pat on the line with you and Pat and I, and we'll take good care of you.
Definitely. And if you do reach out to Brian because you listen to the podcast, just let him know that because then we'll understand the power and the value of this. In closing, folks, if you are a small to medium-sized business owner and you want to take advantage or at least look at potential eligibility of R&D, you can reach us at our website, www.mancuso. It's MANCUSO, CG, stands for consultinggroup.com, or you can connect with me on LinkedIn, and we would love to help you, whether it's tax credit, organizational development. Basically, our goal is to help you add money to your bottom line or your top line or both. And there isn't a business that I've ever talked to that we can't do that. So Brian, thanks again for your time today. This has been amazing. And I'm super excited about the opportunities that we all have in front of us relative to R&D.
Great to see you, Pat. Thank you for your time as well.
Take care.
Bye now.
Thank you for joining Destination Business Freedom with Pat Mancuso. May the insights and strategies shared guide you towards financial prosperity and personal freedom. Continue to navigate boldly. Until next time, keep transforming challenges into achievements. Farewell, and stay the course.